Hi guys, welcome to another video of the beginner series. I am Gashara Gashehe and I'll be taking you through the basics of just another day in Forex for you to understand better what is Forex, how to start up on your Forex journey, and how to navigate time to time, increasing your knowledge from basic to intermediate to advanced. Now, whatever you've heard out there about Forex, it might be true, it might not be true. So let's hop into this video together, and I'll be talking more than whatever you're seeing on my screen. So let's get into it. So what is Forex? Forex is the hugest, largest industry in the world. It equates to around an average of $7 billion every single day. $7 billion, and 90% is where institution, banks, hedge funds actually put their money. We're talking big banks like Chase Bank, we're talking big banks like the Wells Fargo and the Bank of America. We're talking about big hedge funds run by renowned people where they put billions of money just to trade Forex. And the 10% of the $7 billion that runs equity each and every single day comes from retail traders like me and you who use our small capital ranging from somewhere as less as maybe $10 depending on your broker to as much as whatever amount a retail trader could possess. That includes $1 million+. So this is where we range ourselves and try to understand the markets as best as those big institutions do, and we try to hop into the market hoping that we will get out of the market with something. So Forex has been there for ages, guys. No, I'm not talking about the candlesticks that you can see on my screen currently, but I'm talking about the whole process, the whole foundation of how price movement is used. That includes the candlesticks that you see in front of me. The things, the red and greens that you see in front of me are known as candlesticks, and they were developed or they were invented by the Japanese in the 1800s, where the Japanese used them to track the price of rice. So this is how the Japanese used to do it, and the characteristic of the candlesticks is an open, high, low, and close. OHLC. So if you jump into your Forex, or maybe you know something about Forex, so you already know something about OHLC. But if you don't know anything about Forex and this is your first video to watch, I'll take you through your Forex journey and tell you all about OHLC and about candlesticks. The last thing about candlesticks is that no candlestick looks the same as the other candlesticks. The characteristics of candlestick depends on its price. So price is what I have on my chart on my right vertical side. So all this is price. All these numbers that you can see on my right side, that's price. And what I have on my horizontal bottom side is time. So here I have time, periods, and I'm currently using Forex tester 5, and this is 2018 April on 4th. This is 4th. So this is second, this is third, this is 4th. So these period separators, this dotted line separates a day to another day. So this was Monday, this was Tuesday. So Tuesday from this vertical line to this vertical line. So it means that it's price action. This was the price action on that Tuesday, and this is the Wednesday of April 2018. So about candlesticks, you guys can see for every other beginner just using your eyes, you can see that no candle looks the same as the others. So this is what we call the body right here. Let me show you. This is what we call the body of the candle, and this is what we call the wick of the candle. the body of the candle, the wick of the candle, the body of the candle, the wick of the candle. Some candles are fairly small, still have wicks on both sides. Some candles have wick on one side. Some candles have no wick at all, or have wicks on the downside but not on the upside, and candles can only be red or green depending on the market movement. So basic candlestick formation in Forex, where you're using red and green, it means that red means bullish, and when I say bullish I mean going up. If I use a line graph, you'll see that the market here started by going down, then going up, going down, going up. So every time I'm saying going down, you can see red candles. When I say going up, I mean green candles. Then I say going down, I mean red candles. Going up, green candles. Then flat. We already have red and green, red and green. So this is almost something straight. Then up, which is a green, then down, massive down, which is red, and then that's the basic candlestick movement, guys. So this is all about price. It's not what the every single candlestick represent price on its own level. So what we follow is what's the price of this candle and what is it trying to portray to us. Yeah, so that's the basic movement. So the second thing that I want to teach you about movement of the market or of price is that there is no time that price will move in one direction like that. No, never, never, never in Forex will you see the basic movement of price, even if it will be a downtrend. Maybe let's say this is the price of a phone, yeah, and this was something like let's say this was $100,000 for no $1,000. uh just a simple example, guys. So this was the price of the phone and this was $1,000, and we want to move price to something low as, let's say, $500. Just an example, guys. I don't know what type of phone this is, but it's just an example. So if you want the price to move to $500 down here, this is not the type of movement where you expect the market to drop down from $1,000 to $500 in one straight line from up here to down here. Nope, this is not what happens, guys. But let me show you what happens. What happens is what you're seeing in my chart currently. The market moves up and down, but the general direction, yes, is a downtrend. So if I use polyline, you can see that if the market was at $1,000, uh, this is how the market moves. But generally, we are moving to the downside. Yep. So the last thing I want to teach you, so basic, starting in your Forex journey, will be about premium and discount. So what's a premium? What's a discount? So easy, guys. It's just something that uh, you don't use anything. You don't actually have to put anything in your chart. I want to use a trend line, just something to point out. So if this was on a Monday, this was 2nd of April 2018. So the market, this was the opening price of, let's say this is a phone. Yes, this is euro paired with the dollar. But now let's imagine, jump into the imagination world and assume that this is a phone, whatever type of phone that is. So let's give an example that this was around something close to $800 and this was $1,000 and this is kind of $600. So it means that price on that specific Monday experienced a lot of volatility up and down. Yep. So, and this is on a 1 hour time frame, so it means every single candlestick represents 1 hour. So if I calculate how many candles I have from this candle to this candle, they should be 24 candles. just to signify this is 1 hour time frame, so 24 hours in a day. So these were the opening prices, and the market started by going down. Sorry about that, guys. The market started by shooting down and then up, then down again, but not lower than these prices down here. Then the market shot into higher prices above these prices. Then the market stagnated for a moment. Then boom, market shot to $1,000 in a very short time, around 2 hours. Bam bam, then the market shot down below these lows down here, below these prices down here, and then the market shut down. And then before the day ended, the market pulls up again, not up to these regions, not up to these regions, but these are the closing prices of whatever form these was during that Monday. So, and then we open up on a Tuesday, and the same happened. This is the opening prices. The market started by shooting down in price, so the phone price went down, and then boom, shot up to close to Monday's high. So we had this high, then bam, we shot below these prices down here. Again, we are looking at price movement on a daily basis. So we shot down below this, and then we pulled back up a little bit, and then bam, we actually went below Monday's prices. So entering into Monday's prices, and then before the day closes, we actually kind of pull back a little bit. So yes, this is price movement to the downside for the euro paired with the dollar. This is the Forex currencies, but we actually can track how the market moves. So how do you make money in Forex? Is trying to understand the candlesticks and price movement. It's not so much about the how a candle looks, or what candle is paired with another candle. It's what price is doing exactly at that candle. The candle represents the price movement exactly of that hour, of that day, of that time frame that you're working with. So in terms of PD arrays, whatever I was saying, a premium discount array, so it means that if price is already on a downtrend, you already know that this phone will kind of push to the downside. It means that whatever price we have up here, and for this example, this is $1,000. This means that this is a premium. Premium means that it's expensive, guys, and a discount means it's a discount. So this is a premium price, and this would be a really discounted price. So an example, if this was $800, I already told you guys, if these opening prices was $800, and the market of the phone actually pushed up to $1,000, and before the day ended, the market had hit around something like $600, $500, it means that this is really discounted. Someone will be buying that phone of $1,000. Someone else will be buying the phone at prices lower than $1,000. Means that this is a premium, this is a discount. Entering into the next day, this would be a premium, this would be a discount. Entering into the 4th of April 2018, it means that the market pushing somewhere above here would be a premium, and here will be a discount. Now, as the big saying goes, in selling markets mean that the market's going down from $1,000 to $500, somewhere back to 900, goes down to around $200. It means that these price movements is called a sell market, or more commonly Forex traders say this is a bearish market. It means that you want to sell off at premium levels and take your profits at discounted levels. If you're an intraday trader, it means that you could sell off somewhere around premium, take your profits at discount, and buy at a very discounted price, and then sell off to a premium, and then take your sales again here, take your profits here, and then boom, now you're an intraday trader. You're buying and selling. You're already hedging the market. This is an auction market theory. So for this video, guys, I will thank you very much, guys, for having to listen to me in this very video. You guys have be blessed and stay blessed, and let's meet next time in the next video. Bye, guys.